Professional, corporate. Did you know there's a legal IRS loophole that allows you to earn up to $52,000 completely tax-free every single year using your own home? Yes, no income tax, no reporting, and totally legal. It's called the Augusta Rule, and the rich have been using it for decades. But in this video, I'm breaking it down so you can use it in 2025 without making a single mistake.
Professional, corporate, what is the Augusta Rule? The Augusta Rule, also known as IRS Section 280AG, allows homeowners to rent their home to their own business for up to 14 days per year, and the income is 100% tax-free. You heard that right. Your business pays you receive the money, and the IRS does not require you to report it as taxable income. Why does this rule exist? This rule was created for people in Augusta, Georgia, who rented their homes to visitors during the Masters golf tournament. But wealthy business owners quickly realized, wait, I can use my home for business events too. Board meetings, strategy sessions, content shoots, client dinners, annual planning. And suddenly, the Augusta Rule became one of the most powerful tax hacks in America. Brain. How it works. Here's the simple breakdown. You must own your home. Your business rents your home for legitimate business use. You can rent it for up to 14 days per year. The income is 100% tax-free. Your business deducts the payment as an expense. This is why wealthy entrepreneurs call it the cleanest tax-free money in America. Real example. Let's say your home can be rented for $3,500 per day in your area. If your business uses your house for a 2-day annual planning meeting, a 1-day content creation retreat, a 3-day mastermind session, a 1-day training event, and a few short meetings, you quickly hit the 14-day limit. That's 14 days times $3,500 equals $49,000 tax-free. You keep the entire $49,000, and your business deducts $49,000. Win-win.
Professional, corporate. How to run it properly. To make sure this is 100% IRS safe, follow these steps. Step 1. Determine your home's fair rental value. Look at Airbnb rates, local venue prices, comparable homes in your neighborhood. Document everything. Step 2. Create a rental agreement between you and your business. A simple contract, date, purpose, rate, total amount. Step 3. Create an invoice from yourself to your business. This is proof the event actually happened. Step 4. Your business pays you. Yes, literally transfers money to your own bank account. Step 5. Keep meeting notes and photos. If the IRS asks, you show them agenda, attendees, photos, summary notes. Very simple. Common mistakes to avoid. Here's how people screw this up. Using more than 14 days, not allowed. Charging unrealistic rental rates. No documentation. Renting when you don't own the home. Not using your home for real business purposes. Don't make these mistakes. They're easy to avoid. Who can use the Augusta Rule? You can use it if you have an LLC, an S Corp, a C Corp, a partnership, a sole proprietorship. As long as the home is yours and the business use is legit, you're good. Conclusion, CTA. The Augusta Rule is one of the most powerful legal tax tools available to you in 2025. You can earn up to $52,000 per year tax-free simply by using your home for your business. If you want more tax loopholes like this, hit like, subscribe, and turn on notifications, because tomorrow's video is even crazier. This is Tax Loophole Hub, where the rich learn and you win.